Hi, you guys. Welcome back to the channel. My name is Brad. This is Firefighter's Financial Toolbox. Today, we're going to talk about two big reasons why ETFs are so tax efficient. Okay, two of the great underappreciated advantages of ETFs are their transparency and their tax efficiency. Compared with mutual funds, ETFs are light years ahead in these two critical categories. First of all, better transparency. One of the key benefits of ETFs is that they offer better transparency into their holdings than competing mutual funds. With trust in Wall Street right now at an all-time low, basically nobody trusts Wall Street, being able to verify what's actually in your fund is a big plus. By law and by the customer, mutual funds are only required to disclose their portfolio holdings on a quarterly basis. And then most of the time there's about a 30-day lag in what they actually do have, according to the prospectus, or if the manager has taken unwanted risks or changed what he or she decides should be that. Now, you guys, we're talking about active managed mutual funds here. Now, what happens when they start changing things is what we call style drift, which can actually negatively impact an investor's asset allocation. In short, when you buy a mutual fund, you're taking kind of a leap of faith and putting your trust in the manager's pocket, and investors have been burned. ETFs, on the other hand, are far more transparent. Most ETFs disclose what they have in their portfolios on public websites every single day. In fact, if you go to iShares.com, for instance, you can find the complete holdings of almost every ETF in the world. Some ETFs, like Vanguard, fall a little bit short on this metric. They don't update their website quite as fast. But you guys, most of their ETFs are index funds, which have very little turnover. Now let's talk about number two. The second thing that's important is the greater tax efficiency. Now, we're talking about this in a taxable brokerage account, you guys. If you're holding it in a Roth or a tax deferred, it's not as big of a deal. But ETFs are vastly more tax efficient than mutual funds. If a mutual fund or ETF holds securities that have appreciated in value and sells them for any reason, they create a capital gain. These sales can result in either selling fund securities as a tactical move or to rebalance the fund itself. Either way, at the end of the year, the shareholders have to pay capital gains on those. Now, for example, an average emerging markets mutual fund pays out about 6.46% of its total net asset value in capital gains every year to the shareholders. What that does is create a big tax bill for you. ETFs do much better. On average, they pay out about 0.1% of their value as capital gains. So why is that? Well, first of all, it's because index funds have a lot of turnover. ETFs, on the other hand, don't have a lot of turnover. And because of this, they get less capital gains. But the other reason is when an ETF sells for example, an ETF sells a stock that it has. It does what's called an in-kind transfer. And by doing the in-kind transfer, there's no taxable capital gains created because they actually traded one stock for another versus selling and rebuying. It's not as simple as that. The system doesn't work so smoothly for all ETFs now. Fixed incomes ETFs are a little bit different. So if you're looking at like bond ETFs, you guys, they have a lot more turnover, and a lot of these are cash-based things, and so they are not as tax efficient. But if you're holding ETFs for stocks, they are the most tax efficient as holding a fund, right? Now, if they're active managed funds, and there are active managed ETFs as well, they do have a little more turnover. Most of the ETFs that I like and I recommend are index fund based ETFs. So it's an ETF based around some sort of index for a couple of reasons. A, they're low cost. B, they have low turnover, which means they create less taxes for me. You guys, these are two good reasons why ETFs are more tax efficient than mutual funds. Remember, the transparency is better and the tax efficiency is much better. Consider this if you consider taxable brokerage. And I hope you guys got something out of this. If you did, do me a favor, drop me a like. If you're new to the channel and you haven't already subscribed, you know the deal. Hit the red button, ring the bell. All right, we'll see you. Thanks.